Hello ladies and gentlemen, and welcome back. In today's video, we cover stocks, commodities, and cryptos, and specifically we will look at two things. The first one, the stock market reached our level where we expected sells to occur. So far, so good on those sells, but what's in store, of course, Thursday this week could be very, very interesting for everybody out there. We also have crypto back in focus. Why? Well, Bitcoin made a new low on top of the FTX scandal, and it looks like another Luna style situation. The calm has kind of settled, but still what's happening for crypto could be very interesting moving forward. So join us now as we talk about market bottoms and what to expect, and also what's going on in these markets right now. See you soon. Well, welcome back everybody, and in today's video we're covering the news, the macro data, the lead indicators, and of course the key levels that we should be watching. But we'll start off here with some news. Crypto retail investors rattled after Binance moves to supposedly acquire FTX, non-binding I believe. At the time of this recording, I don't think they've gone through with it. Obviously, it's creating some stability on the charts, but overall, another bad news story for crypto. Illiquidity also becoming a problem. We'll take a look at that later on today. We also do know that, of course, the US is in midterm elections. This is going to be a big story moving through the next couple of sessions into the next couple of weeks, and it's going to have some impact on markets. It always does. It tends to be a bit of a statistical period of time as well, which has historically been quite a big bullish turning point, but maybe not in 2022. Smart money versus dumb money. We've finally seen the cross. Now, this has been ominous for markets. When we've seen these crosses in 2022 so far, bad things have occurred. So will we have that again? Ultimately, it's up to the inflation numbers, but the charts are telling us it certainly could be the way it's going. In fact, the initial reaction was exactly what you would expect for a market to be turning to the downside. Conditional seasonality, Sp500, bear market years. This is still a period of ultimately some weakness, or at least sideways kangaroo style action. In all years, usually it's a great time to own the market. In bull market years, it's specifically a very positive time to own the market. But, this is no year like other ones. If we look at the earnings for the current US market earnings season, it's pretty bad. 59% on lowered expectations, beats 1,244, misses 867. That's not what you want to see. And it's pretty bad. Any normal earnings season, 59% at this time in the earnings season is not good enough. It's pretty scary out there. We're still in earnings, so if you're in any of these companies, you need to be paying attention to it. These are the big ones coming out. But let's jump into understanding what's going on underneath the hood. We've been talking about gold, specifically GDX, which we reported on a few days ago as an emerging sector of rotation. Wow, what a day. Another 6% bagger for gold. So clearly there is some market participants that believe we're entering most likely some form of stagflation. That's where we see the Fed funds terminal rate at the moment sitting around 5.1%. But at the current data and current information we have, it's expected that there is basically no rate cut now in 2023. That's saying that the market expects persistent inflation, which will take longer to come down to the Fed's target level and will force a higher interest rate for longer. What an interesting time we live in. Potentially the stagflation is occurring, and as we know, gold is one of the biggest benefactors of stagflation, at least historically. That was the big sector. We'll look at that on the charts very soon. What about the VIX? Well, the VIX did jump about 4.89%. We'll get into the charts now. 25.53. We still haven't seen a big 45 VIX yet. And a lot of people are saying, why are you so negative on this market, Tom? Why are you saying everything's going bad? Look, I'm just playing the stats. And the stats usually point towards a fear capitulation being usually a bottoming effect on markets. We haven't seen a serious fear zone in 2022. I know it seems like it, but we haven't had one. Now, traditionally, you get like a 45 plus kind of reading. Obviously, some of the zones in the past have been extreme, and that tends to at least potentially mark the lows. We'll talk about bottoming markets later on today's video, though, and some of the things that we can look towards for bottoming markets. What about 2-year yields? They can remain persistently high moving into, of course, inflation numbers. The 5-year yield, 4.3, and the 10-year yield still very high at 4.143. But the big one is April, 5%, September, 5%, December, a little bit of a drop. Basically, no rate cuts really expected in 2023. The possibility of one later on, though it's become more apparent that they expect rates to be higher for longer after the Fed's comments last week, specifically Jerome's comments. High yield bonds, what are they doing? They're kind of sitting around. They're not moving up nor down. And this is all ahead of inflation. Again, when the inflation read comes out, if corporate high yield bonds make new lows, watch out down below. That could be very bad for markets. It's the same thing with corporates. Again, sitting sideways, market rallied. Corporates didn't exactly come with it. Market dropped, corporate stayed flat. If it keeps dropping, especially if corporates keep dropping and high yields, we have to expect the market to be moving on the way downside. What about the US dollar? What happened there? Well, we'll notice we came back down to this low. We're still in that ultimate demand zone from the previous level over here. So we've entered into the secondary one. We fell from this level and we fell down. Is this the turn point? We are at absolute critical, funnily enough, moving only a few days ahead of course, the inflation numbers. We want to set some alerts here. Let's jump into the smaller charts and understand some of the key zones that we should be looking at. So effectively, the dollar has gone back up to this level and it's found some level of supply. It's going to be important for us to see a breakout from this area. And if that occurs, then we have to expect at least temporarily bullishness for the US dollar. If that happens, what do we expect for the stock market? Potentially down. Let's have a look at the euro and see if that's agreeing with us. So the euro has already hit into a previous supply. If we take a look over on the left-hand side, there's our supply. Here is the zone. And again, if we see spikes, drops, or anything that comes under these levels again, we've got to watch out down below. Euro could easily get back into this zone. What I'll do is I'll move this alert up now to the key levels of where the market may go should we actually see a sell-off. Remember, DXY strength will enter euro, US dollar weakness generally. Gold also was a huge benefactor of the weak dollar over the last 24 hours. Here's spot coming through. The weekly looks incredible on gold, as we mentioned, and we've reported on this weekly big bullish wicks. We're doing quite well. We did think that there might be a little bit of a more drop, maybe to allow buyers to get back in. What ended up happening was before the session, we made the new low here, and then we instantly reversed that. And that was basically a very strong period for gold. Once that happened, it swept those lows, took the liquidity, and grabbed them. If you're looking and you understand small kind of action on the charts, this would have been a pretty key level. But now that gold's at 1710, the turnaround story seems to be maybe possible purely just because the US dollar may actually find that rally. GDX though looks incredible. I mean, if we look at the stocks, which of course have been in an accumulation pattern for quite some time, even if gold goes down, stocks can still go up. It's like commodities. If you look at oil obviously actually declining. However, oil stocks still powering through over the last couple of months. So gold stocks having a huge breakout. We first reported it here. Obviously, we had the island reversal, one of my favorites. The volume's consistent. This is the sector. We have a lot of good news stories for potentially gold moving forward. Now, that doesn't mean it won't drop, but overall, the accumulation story seems pretty solid here on these particular sectors. US oil, let's have a look at that. It actually fell through that alert. We didn't see a rally buy up yet. I'd still be expecting a rally into a drop, but the oil actually has fallen from these highs. So we got a high, a low, a higher high pushing through 93, and then a lower low that went underneath $90 a barrel. We're still on higher lows in terms of the overall swing, but if the rally market does rally, I'm going to set a little alert around this price here, which is sitting around that 91 kind of 55. And I'd be looking in that zone to potentially see whether there's some weakness that comes through here. Clearly, there were orders entered into the system here that have now further shorted oil. So if it returns back to some zone like that, in fact, I might just actually lower that a little bit. You'd want to lower it around here. If it enters into this zone, there could potentially be some further shorts on US oil for now. That doesn't mean necessarily you go at the stocks. I mean, a lot of people are commenting, but the oil stocks are doing so well. Yeah, they're a little bit separate. I mean, you've obviously got ZOM here on an incredible recovery path. Percentage-wise, you're talking about 36%, pretty much all rally. October does tend to be a very strong month. I know a lot of people in the room that have been bullish on the oil stocks, yet they've just been kind of floating with US oil. And similar to that gold story, remember gold's been doing really well. If this starts to tip though and the narrative changes, this is a pretty nice rally And it's starting to get so extreme that you do expect a pullback soon. Everyone is talking about oil. That's usually a period of time where you need to start to question what you're going to be doing there. Let's move over to XLY, XLP. This is how we kind of start to find market bottoms. Remember, if we see 1/3 of the US economy, which is consumerism, XLY, consumer discretionary, should be beating XLP. It's not doing so. We've almost got a new low. In fact, I think we swept into a new low over the last 24 hours. Once this starts to close down, we've got to start questioning whether we believe the US economy is actually strong and whether the stock market is strong. It's not our opinion. It's the opinion of obviously the ratio here. Remember, if we correspond this with SPX, we can get some really good ideas about how this particular thing ends up taking us out of lows. Go and have a look at these periods in low in times and then compare it with SPX. You'll find that the Sp500 often will make a double dip, even though XLY, XLP will already be recovering. We usually expect consumer discretionary to help lead us out of market lows. This is still a very worrying sign for us in the markets. Speaking of consumer discretionary, Tesla, another low. No rally through the session. We ended up down 2.93% and post-market was down another 0.5. Are we going towards 180, the level we've been discussing for basically weeks now? It seems quite probable, and the market may bounce off this zone, but of course we've got alerts set around this area. This is a very critical point that began several rallies in the past. Will it find buyers again? Certainly could do so, and I'm sure day traders are specifically looking at that. And then they've got other levels down below, such as the ones we've highlighted. But 180 for Tesla seems like it's more probable than not at this stage. Let's move over to Apple. What's going on there? 139.74 in the post, 139.51 in general. We're still hovering around that demand zone, waiting for, no doubt, something like the inflation number to really show us what's up. Now, traditionally, markets will usually gravitate towards extreme levels ahead of news. It could be that Apple and other stock markets will actually move down towards the shorts. We'll look at that soon though. But if Apple makes a new low, you want to know about it. If Apple starts to rally to a new high, you want to know about it. Of course, this will all be most likely present on the inflation day, one of those two levels you would expect to probably crack. The good news story for markets, a lot of people are pointing towards financials. Not only are we seeing commodities, industrials, and other sectors do well, but we're seeing financials almost kind of forcing a double bottom. They're not quite there yet. This is ahead of inflation news. So very interesting that we're not getting that kind of financial instability. And these have been okay sectors to be in for 2022 in comparison to the rest of the market. Again, high interest rates technically does make better money for financials. It makes some sense, but we're moving back into that kind of resistance territory. So be careful here if you're in these types of sectors. The Dow continues to outperform the S&P 500. The old economy is kicking some ass in comparison to the new economy. And this is leading into, of course, a strong Dow. Look at that, a new higher high. So for bears, you now need the lower low. In fact, this is now paramount that we get this. And this will lead into some serious problems in the market should it happen. So we're going to put that lower low alert in. We're going to set like this. We've got the high, we've got the low, we've got the higher high. I want to see a lower low. And if we get that, a huge turnaround could be happening in the US economy. Remember, it's cracked theoretically some of this downward trend. It's not quite through it. An extreme zone ahead of extreme news being the inflation. Yep, the Dow's looking pretty damn good in comparison to other markets. Same with things like the DAX and others. They look better in comparison to other markets. Let's now look at tech. How's tech going? Not so good. I mean, tech looks pretty terrible. We've got alerts straddling both areas, and we know that tech is not really causing the recovery. Theoretically, it usually does. We're seeing compression in the valuations here. It's the tale of two stories. So overall, we have that 11,600 zone. We now have a full-on channel. Could this be distribution? See, the problem is if this is distribution, think about it. The market does this. The market then makes a new low. It traps a lot of longs that have been accumulating positions here and crushes them with that last final, or at least some kind of final capitulation fear waterfall event. And yes, we have made correlations to 2008. I know it's different. It's just the style of the way that markets tend to do these things. Yes, no time in history is the same, but it's just important to understand that's how markets can crush positions. Once you accumulate position, if you accumulate and you're selling into it and then you crush them, then you can squeeze it through. It's probably not the time for that to happen just yet, and we'll explain that with options in a moment, but still quite weak here on the NASDAQ. We go into the 2 hour and you will see that there was a lot of kind of volatility. I'm using the Sp500 to really, I guess, give us further clarity to the NASDAQ, and it'll make sense in a few seconds. So here are the 3 supply levels that we talked about. We hit number 1. Obviously, we made a high, a low, a high, a high, and a lower low. We've now rallied back up, and we've found some shorters around this area. That makes sense. It was a pretty good level of supply. We saw a lot of orders come into the market, and it realistically reached perfectly into that 38.40 to 38.60 range and shorted off. Now, what's in store moving forward? Well, if we have a look down in the market conditions, what you'll notice is that we saw a drop, which swept some lows, followed by an epic rally that almost pulled ourselves all the way back. I'm sure a lot of people bought this dip, and there's probably a lot of buyers that have been trapped into positions here. I'm starting to favor, this is my personal opinion, potentially the short moving into this inflation number, just from the temporary charts that we're seeing here. Of course, things can change. You have to be adaptive, but this is the type of thing that would happen to trap a lot of people into longs. I'm not saying that it's guaranteed, nothing is, but it's a very interesting area, and it's worked out exactly how we expected it. We expected this, we expected rallies, we expected this zone. So far, so good. Now, does it move into the further shorts? Well, we'll find out. Inflation number ultimately can completely, like this, destroy everything, like a snap, yeah? It can destroy all of these ideas and trades, and we'll have to adapt to that if necessary. But we're at the right area for the shorters to remain concerned. We'll look at crypto in a second just to prove a point that the markets are starting to get a little bit sick again. So let's now have a look at what's in store moving forward. So here on the Friday, we have 1.1 million options open. We still have a lot of 364 puts. Who knows why it's that one? And we have a lot of 350 puts. So the max pain, not that we're going to use that, is around 378. Current stock price seems to be around this zone here. Overall, it still could easily drop back into this zone. So it's not unexpected to push us down into the 360s this week. If we move forward, the big options expiration is the following week, which sits us in a huge amount, 4.78 million options open. And you can see here all of the huge amounts of puts sitting down the bottom. It's not really beneficial that the market pays those out. So we must remember that even if you're feeling bearish, there's still so many puts down there. A few people have said, well, Tom, it's such a crowded trade, it's too expensive anyway. The amount of premium options put sellers are making is extreme. Yeah, absolutely. But that doesn't change the fact that the market should be held by one of those levels, you would think, over the next coming weeks. Let's have a look at this FTT coin kind of disaster. Look at this. Ugh, it reminds me of Luna. I hope no one's caught in this one. Yep, it's another crypto disaster. And it's bounced a little bit on that potential acquisition, but it looks pretty damn shocking. I mean, this is not the type of thing that you want to see going on if you're feeling bullish on crypto. It ruins and degrades kind of the, I guess, way that people perceive crypto, and it doesn't exactly bring new buyers in. And that's what we're facing here. If you notice, crypto made a new low. So it actually played pretty similar to what we thought. Yes, okay, we were looking towards that 22,000 kind of level, but we also said that if we made a new low, there'd be a good chance of a rip followed by a massive dump. And that's what happened here. We ended up getting a new low, a rip, and a massive dump. And that was huge. Now, is this bad? Frankly, yes, I think it's really bad. If you look at this and you think about what's happened here, there's no doubt a lot of buyers that are trapped here without stop losses. People would have had limit orders bought through this. We're now at new lows, and while this could all be part of a max pain recovery story, it's possible, it's not really probable, and that's because there's so many evolving pieces to this. What other darknesses lay within the crypto world right now? We don't know, but I'm sure there's more than just one. Where there's one, there's usually many. So we'll have to be aware of that. We've come back to test this kind of previous support zone, and we're now finding it as potential resistance. And if crypto starts to fail, I still think that these are all interconnected markets. It shows us that there could be money being needed to pull out of the US 500. There could be money that's pulling out of risk in general. And some people, no doubt, unfortunately got leveraged over the last 24 hours and would have been called in on that. So what's in store next? Well, if we keep falling, the problem is there's not much catching crypto all the way down until some of the levels we've discussed before. That real 11,500 to 9.5. There could be severe drops moving forward for crypto. We are in crypto winter. It's the right time. We expect hopefully the low to cause before February of 2023 if it's going to follow similar cycles. But that's not what you really want. And yeah, if it makes a new low, again, it could be very, very serious. So I think crypto is one to watch over the next 24 to 48 hours, even the next couple of weeks. And we'll have to see how this story plays out. Big volume, lots of liquidity, huge amounts of disasters in several coins, but it wasn't necessarily new lows for all coins. Ethereum held better and some others did okay as well. Ultimately, everything's going to move on the inflation number though. This has been the biggest news event that we've seen pretty much for the last couple of months, and it's expected that inflation is going to remain fairly sticky. 8%, 0.5% increase. Interesting. Okay, we'll see how that plays out. But yeah, that's the big one. And then we move into Friday. And of course, we have some bank holidays, prelim UOM sentiment, those types of things coming through. So do remember, guys, inflation's the big one. That's on Thursday. Wednesday should be relatively slow in comparison. Markets moving towards extremes ahead of this news. And then we're going to find out what the zone is that will end up forcing these markets through. If you haven't already, come and follow us over at FX Evolution, of course, on Twitter, and check it out. And if you're interested in any of our courses or anything of the things that we do, you can jump over to fxevolution.com. I'd also like to just take a quick second here to thank everybody on the channel. And of course, thank you guys for following and subscribing. We are doing a bit of a giveaway, one of every one of our courses. We've got, I think it's thousands and thousands of dollars of giveaway prizes there. So if you're interested in joining up, you can check the link in the description down below. And I've made sure to pin that as well. So you can jump in. All you have to do, it's completely free. You can just sign up and basically go into the chance to win that. And we'll be drawing it, I believe, next week. So we'll draw it on the channel. And if you're one of the lucky winners, I look forward to meeting you or having you in the community very soon. Thanks so much, guys. We'll see you in the next one. Bye for now.